Welcome back. Let's get chatting with the management of Somany Ceramics. The stock is in focus. It's seen increased domestic demand for its products, and for the industry itself, low fuel costs are likely to aid the performance as well. Above and beyond everything else, higher exports coming in from the Morbi cluster would mean that domestic branded players would do well too. How is the situation playing out right now is something that we will monitor. The stock has recovered from the lows, but if you just take a look at yesterday as well, it was a big gainer, up almost 6 to 7 odd percent. Abhishek Somany, who's the managing director and the CEO of the company, joins us now to discuss the prospects of the business in detail. Thanks a lot, Abhishek, for joining in. You know, the big triggers is improving demand and reducing fuel costs. You had said that April grew about 9 to 10% in terms of sales, and May was about 13-14%. How has May been so far? Your prognosis on demand, you want to revisit that from your conference call? And have we seen further moderation in gas prices?
Yes, so May has been muted. So demand generally in the first quarter stays muted. We were expecting that. This year has been a little more than usual, but that's nothing to worry about from a long-term perspective, even from a medium-term perspective. Gas prices have come down. There is no further moderation in gas prices. The last one was done 15 days ago, 7 days ago on the 1st of June, which was the gas prices in Morbi region was reduced to 39 rupees a standard cubic meter. So kilocalorific adjusted to across India, it translates to about 42, 43 rupees a standard cubic meter. So yes, there has been a 2.5, 3 rupee reduction even there.
Okay, Abhishek, there has been a price war going on as far as gas prices are concerned as well. Propane prices have been cut. It is expected to come down from July because there's been a global price cut here. Does that mean if that price cut comes about, it'll become lower than natural gas prices as well? Does that mean you'll move to that particular segment? What is the split right now when it comes to gas sourcing?
Currently, natural gas is the cheapest. Propane is almost the same as natural gas. And if it remains at parity, we would rather use natural gas because it's much cleaner to transport and much easier to monitor. So that's the prognosis on that. There are 3 different prices. There is a separate price in the south of India where we're getting spot in our south plants. That is at approximately 50 rupees a standard cubic meter. In the western region where we get from GSPC, it's about 42 rupees, like I said. And in the northern region, we get from GAIL, which is about 46, 47 rupees a standard cubic meter.
So blended SCM would be how much?
Sorry, blended XCM would be approximately weighted average for us about 44, 45.
And that's now, last week was cut down to 42 in one of the geographies.
One of the, I'm factoring that in.
Okay, you factor that in, it's 44, 45, and this compares with 47, which was there at the end of the fourth quarter, right?
Yes, a little more than that, in fact, 49.
Okay.
Okay, so what would the impact on margins be in that case? Also considering that I told you about the price wars that are going on in the industry for gas pricing. By the end of FY24, what level of margins are you looking at? Would you make changes to the guidance that you had given earlier?
So I think the gas prices globally had shot up and it's come down. It's not anywhere close to the region where it was, let's say, 24 months from today. That is a good 10 rupees cheaper, in fact, 24 months from today. So to that extent, we're still under the high gas price regime. Now this, I don't see it coming down further. As far as competition is concerned and as far as pricing is concerned, exports have opened up, freight rates have gone down. So therefore, Morbi is now taking the benefit of exports. That leaves a lot of room for us in the domestic area to gain market share and also stabilize pricing. On the other hand, construction industry is also picking up. So a lot of Morbi supplies to a lot of the private builders, the smaller builders. So for us, the retail would remain strong. And as far as margins is concerned, the gas price is still extremely volatile. And we don't know what Morbi would do with pricing as we speak. So from that point of view, I think my guidance would remain the same, where we mentioned that we would be anywhere between the 9-10% EBITDA levels, but that would also largely depend on capacity utilization. So we are hoping that capacity utilization go up to the same levels as it was 18 months from today, which is closer to the 90%. Last year, we were at 80%.
You said that demand in the first quarter is usually muted, as you saw in the month of May as well. That doesn't change your guidance from mid-teen sort of revenue growth with 12 to 13% volume growth, right?
Yes, should not change because generally we are expecting after the rains H2 to pick up. So yes, we still are very clear on that guidance unless something untold happens towards the third quarter or fourth quarter. But that's don't have a crystal ball to predict that. As of now, we are looking at the same guidance.
Oh, okay. I wanted to understand your revenue outlook on allied products. The sanitary capacity is higher. Your faucet capacity has been increased as well. What kind of ratio do you see in terms of split, and what kind of growth are you looking at in this segment?
Right. So there we're looking at least a 25+% growth this year. Bath fitting is doing very, very well for us. The increased capacity also is getting absorbed. As far as sanitary ware is concerned, we're still running one of the big kilns. The smaller kiln is shut until the rains get over. We had a little bit of excess capacity going into April and May. Therefore, we shut a smaller kiln, which we will refire in September. So other than that, I think both put together blended, we are looking at a 25% plus growth in the sanitary ware segment. So very happy with that segment and looking forward to more coming in from us in terms of products in both bath fittings and sanitary ware.
You've stated your intent of the promoters actually looking at this segment as the growth area for the company going forward as well. What's the long-term vision for the sanitary ware business? I mean, what proportion of your overall sales do you anticipate the sanitary ware business to be? And at what scale do the margins start, equating to the other parts of your business as well?
So sanitary ware, so there are three businesses which we have. One is sanitary ware, one is bath fitting, and one is tiles. Sanitary ware generally has a much higher EBITDA level. Next comes is tiles, and the third is bath fittings. Currently, we are putting an extra amount of money on the sanitary ware and bath fittings in terms of A&D, etc. So therefore, it is slightly lower than what it would be normally, but it would catch up at maybe the 400, 450 crore rupee levels of revenue with other industry peers. We are currently at 250, and this year looking at 300 plus.
Okay.
As your question as to what would it be as a percentage of our total income, total revenue, I don't think it would be in the near term more than 13 to 15%. The reason for that is sanitary ware and bath fittings both have very limited usage. I mean, in a bathroom, you can only put one piece of basin and one piece of sanitary ware, and similar with the tiles, similar with the bath fittings. Whereas in tiles, I think we haven't scratched the surface as yet. India has yet not seen facades being tiled and roads being tiled, I mean footpaths being tiled. So a lot of new applications for tiles keeps growing the industry. So it would be an unfair competition to compare the two. Therefore, tiles is a very square meter hungry business, and the bath fitting and the sanitary ware is a more pieces hungry business. So I don't think India being the lower part of the per capita consumption of tiles, there's still a lot of growth there. So sanitary ware would be between 13 and 15% of revenue.
Okay, all right, Abhishek, thank you so much for that detailed explanation on the allied product segment as well. It was a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Somany Ceramics, a detailed explanation on what the outlook is looking like in FY24. We'll do one thing, slip into a short break and get you more on the markets and a lot of stock-specific action on the other side. Stay tuned.